You are listening to the Critical Mass Radio Show, Orange County's business talk show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
I love that music. Yes, and you're listening to Orange County's longest running business talk show and podcast. And I am your host, Rick Franzi. And boy, do we have a good show planned for you. Why do you ask? Because our guest, Brett Buettner, is here. He is the president of Buettner Insurance Agency. Brett, welcome to the show.
Thanks, Rick. Glad to be on.
So let's start with the very interesting story of how you, as a young man, got involved in the insurance industry.
Of course. So in insurance, I feel like you either fall into it or somehow life pulls you in that direction. And I'm a third generation broker. So, fun fact, my journey into insurance was pretty much accidental. I went into college and my parents were really helpful about telling me to do what I want to do that makes me happy. So I was never pushed into insurance. I'd see my father come home and he always seemed pretty tired coming back from work because it's an industry that takes a lot of energy. And I rowed in college for 2 years, went to LMU, and I left rowing to start exploring job positions and interning. And I was in programming and marketing and HR, tech sales. And when I left rowing, I wanted to stay an athlete. So I restarted the triathlon club at LMU, and I was the president there. And this kind of started the whole healthcare journey into health insurance, which is strange. So I had a really old triathlon bike. It wasn't old, it was just really cheap. And I finally got new pedals. And I was so excited. Like I could finally clip in with my shoes. And I was jazzed. And the guys at the store told me, hey, just letting you know, the first time you clip into these, your instinct is to stop your bike by putting your foot down, right? That's how kind of you stay if you need you stop at a light or what have you. But when your feet are clipped in, you have to learn to take your feet out and clip in. And I'm kind of a trial by fire person. So I was in LA and I get on my bike and I put one foot in and I'm like, this will be easy. Get my next foot in and I start pedaling and I stop at a light or stop at a car and I start frantically trying to figure out how to get my foot out. I fall into the street and cars are just flying past me. And I had this strange thought of what, I'm an intelligent person. I have an education, but what do I do if I get hurt? Who's my insurance carrier? What hospital to go to? The only thing I could think of was call my dad, which, as a college student, you probably want to have better answers than that. And I quickly learned from that experience, there's not only a need for someone like my father and now like myself, but also on top of that, it helps people. So I went into that and thinking to myself, well, I think this could be a good way for me to help. And at the same time, the Affordable Health Care Act was coming out. And I started asking my father about the changes in the industry. And he was explaining that a lot of brokers were unhappy because all these new changes, their jobs are changing. And with that, I called him up and I said, hey, it looks like for me it'd be a good opportunity to join your business. First off, would you be okay with that? And he said, yes. And then I said, what do I need? So I needed my license. So in college, I got my license for insurance and I graduated on a Saturday. And then I started working on a Tuesday. And that was a decade ago. So that's how I got my start. Nothing was really planned. I liked my other jobs too, but I felt a need in this industry and you can help people. So it's, two birds.
So did you eventually figure out how to unclip your shoes?
I did. So I completed a half Ironman length triathlon and I was still on that bike and everyone had these super, you pick up with your finger kind of bikes. And
right.
I'm kind of like going, and it was a great experience. So I did with a buddy in San Diego. So yes, I did.
So there's this mini sprint triathlon in Los Alamitos. It got stopped for COVID, but it's back now. And it's now in April. You 5K, you bike for 12 miles and you swim for a couple 100 meters in a heated pool. Maybe you'll join. We have a small group of REF members who do it, who did it before COVID each year. Maybe you'll join us and set the pace.
Maybe. I don't have a bike anymore, though.
It's not till April. Christmas is coming. There's a lot of time.
Yeah.
Okay. Would love to have you join us. All right. So that's how you got into this crazy industry, which used to be called Obamacare, but now it's the Affordable Care Act. That's an interesting change.
I mean, It is the ACA, the Affordable Care Act. It's just people would call it Obamacare, but it's the same thing.
Yeah.
Yeah.
Okay. And it's popular now, isn't it?
A lot of people like their insurance. If you poll employees and I guess just Americans, if they have employer insurance, or in general, most cases insurance, they like what they have. They like seeing the doctors they want to see and all that.
Okay. When I introduced you, I didn't introduce you as a broker. I introduced you as the president.
Yes.
Buettner. So how did that happen?
Well, in my story, my father was the president of the company. And when I came in, over the last 10 years, I've been working I started at the very bottom where I was just trying to learn definitions of things to really understand, because it's kind of like, I wouldn't say it's like law, but there's so many convoluted subjects and what's a deductible, what's this, what's that, what carriers do you have to work with, what are the rules and regulations. So I started off being very, I guess, focused on smaller things. And then as I went through the business, I became an account manager and a broker. And president's I kind of do everything now. So I take out the trash too. So I'm,
So what's different? What have you learned going from those other jobs to the latest job, which as president, I assume you're kind of in charge?
Yes. Yeah. So I run the firm. I would say it's very eye-opening. And I would say I respect my father more than all business owners. Because when I was just a broker, like a producer, where your main focus is sales, I think it's a lot easier to look at your day, look at what you need to do, and kind of take the wins. When you're running a business, it's everything. And, you got to make sure everyone's happy. You got to make sure everything's right. Your insurance is the right places, all insurance. And I think one of the biggest things too, which I appreciate now more than ever, is trusting your vendors and having full trust that they'll do the right job. Because when you run a business, you can't do everything, right? So you have to have the right people, which we have great people who've worked with us for a very long time. And on top of that as well, vendors, like your 401k vendors, you want to make sure they're doing a good job. Whoever's giving you insurance wants to do a good job, really everything. So I'd say leaning on, it's like being the president of the United States. You have a cabinet because you can't do everything. You have to have many people working behind you that you can trust and rely on.
So I wanted to have you on the show for quite some time, especially after I saw you give a presentation on sort of the complexity of healthcare and insurance and the different factors and levers that a business owner could employ to try to manage this. It is a very confusing labyrinth of interrelated entities, isn't it? As a broker, what you have to do for your clients is navigate that. So tell me a little bit about Buettner Insurance. Like, who do you help? What's your niche? What problems are you solving? And who really gets a lot of value from working with you?
Absolutely. So, and I like that you used the word levers because that was in my presentation. So I know something sticked.
Yes.
We're stuck. So we're a full spectrum employee benefits firm. And a good way to think of that in like a layman's terms is we do a lot of the same things that a benefits department would do. So in the very nitty gritty, we broker and shop for plans. So just all brokers would do that, or at least they should do that, where every year for renewal, you make sure that a client has the best possible plans for them. What is the best plan? It depends on the client. So that could be, are they on the most efficient networks? So you can save clients 10 to maybe 15% just by changing networks. Or are they on the best carrier for the region they're in? Again, you can save a lot of money. I know we saved a client almost $100,000 just this year alone on renewal because they moved them to a different carrier. So there's a lot of different ways and levers to change how the benefits affect somebody. But more than just that, the reason why I say we're more like a fractional benefits department is because we handle all enrollments, all terminations. We handle all the open enrollment. We provide online enrollment as well as physical enrollment. We provide open enrollment videos so that employees can watch and experience open enrollment in the comfort of their home or with their families, which a lot of the times, especially the dependents on the plan, the whole family wants to decide what their benefits should be. And if you hire employees during the year, so mid-year, they can go through their own open enrollment. You don't have to have, another one where you have to stall everybody and what have you. And besides all of that, and just communication, sort of always being in touch with our clients, because people like to get called or emailed usually, a lot. We also provide HR technologies. So we always try to leverage what we can as a company because we're privately owned, family operated. We're not beholden to private equity or shareholders. So we leverage our profits to provide our clients with a very expensive, but we provide it for free to our clients. We just pay the whole price. HR technology tool, which allows them to have access to an HR consultant via phone calls or emails, which is very helpful because benefits and HR are very much connected. If they're a wing of a company, they should be kind of touching because, I mean, the people that we mainly talk to is the HR because they're the ones handling the employees and they do such a good job. And it's a very difficult position, especially in California or companies with multiple locations handling all the HR changes and regulations. But we offer that HR technology, and it also has compliance tools for new groups with something's called a compliance calendar. So when there's changes or compliance rules, it sends them an email telling them what to give to employees. There's applications for growing your business, hiring employees, salary benchmarking, performance evaluations, and just a plethora of really good information. And we try to make sure our clients are aware of what we can provide just because these sort of tools are extremely helpful. And one of the clients, they saved almost $20,000 using the tools within a year and over 60 HR hours, which is just great to hear because that's expensive in California. And we really serve any group throughout California. If they're domiciled in California, we have groups all over the place in regards to employees, but their headquarters need to be here in California. And group sizes, we work between 2 and I would say a few thousand employees, but probably sweet spot's going to be maybe 10 to 300 employees. Mm-hmm. And industry-wise, we are agnostic. We will work with anybody. We have a lot of manufacturers, a lot of food industries, a lot of engineers, aerospace, tech, marketing. We really work with everybody. And as long as they're happy and as long as they want a good partner, we love working with them.
Yeah, well, everything you said sounds good. The HR IT system that you give them access to sounds really good. I know from hearing you talk and hearing my clients talk, this area of running their business is a very fluid, and employees can be very emotional is not the right word, but I mean, it's really important to them where they are in their arc of their life. Young families about to have a baby, maybe a child with an issue or an older person. It's just everybody needs what they need from their healthcare, and you need to be able to find someone that can support all those various different aspects of the employee base, right?
Sure. Yeah, I agree with you. It sounds strange saying it because a lot of insurance is logical, right? It's this risk adversity. But a lot of it too is emotional because people, like if you're trying for a baby, the insurance policy that you're on definitely matters. Birth, it's expensive. The right doctor is going to be expensive. The whole right doctors, including, your child's doctor. So those sort of conversations really helps employees feel comfortable. I guess that's the emotional side of it, is just the fact that they know if I choose this policy, I'm going to have a better experience and my family will be okay. It matters a lot when you go home and you know that you're covered.
It's kind of it's interesting to me because at one level, what you really care about is, can I have my doctor? And the medical group that they work for, the network, all the rest of that stuff is like irrelevant almost. Can I still go to see Brett? Is Brett going to be able to service me? And figuring that out can be I think part of what I've heard you say is part of the value that you can bring. If you can keep things the same, but make some changes above that lower the cost for the employer, it's a win-win-win.
Absolutely. That's where the networks come in, where a lot of carriers have different networks, but what the networks really do is, imagine, again, kind of layman's terms, if you have 100% of all the contracts, all the doctors and hospitals, there are some networks that they consider themselves enhanced, where they have less of that 100% chunk, but they have a specific amount that is hospitals and doctors that are really sought after. And we've found when you move groups that are in these full networks into a narrow network, again, depending on the group, you can save a lot of money. And you can still keep the full policy for those that need to go somewhere else and just have employees buy up or whatever your situation is. So everyone wins. The employees pay less and the employer pays less, and they get the same doctors and hospitals. Depending on the place.
The service that you and your competitors provide is like really valuable to a business owner, because this is not an easy decision to make, and changing it can be fraught with unintended consequences. So I'm glad you guys do what you do, and you're a part of our ref community here in Southern California. So we've kind of talked why employee benefits are so complicated, and I'm wondering if you could share with me maybe a piece of business advice that someone gave to you that you have found valuable and you could share it with our audience.
Sure. So I was lucky. I had the best mentor in the world, my dad, who's in this photo. I know it's like backwards. I'm trying to figure out. There we go. So that was my first day. That's him pointing to the door. This is Buettner Insurance, and that's me in my suit. Great mentor, though. And I mean, he has a lot of good information and advice, but I would say probably the best one that I think kind of follows the mantra of what I also previously said about how we leverage our profits to benefit our clients is it's better to have 80% of something than 100% of nothing. So, I mean, in our business, again, leveraging profits to provide an HR technology is definitely one way to do that. And also the way that we view a client's renewal, we always want to shop. So by shopping clients every year, it basically means, let's say you're on a certain carrier and you get X% increase, which is going to likely be an increase. That's just how the market works. It goes up like balloons and just keep going up. But it basically means when you're doing a renewal, shopping and just taking other carriers and trying to figure out who's the most competitive. And then you go into networks and what have you. But the way that we always do it is we always want to squeeze as much as we can to save our client as much as possible. And some people might think, well, that's weird because you're basically lowering your commission because it's a lower premium. And that's fine. As long as we keep our clients and our clients are happy, we're happy with doing that sort of service because a lot of our clients we've had for decades, we keep them because, I mean, I like to think I'm friends with most of our clients. So the way that I see it, his advice of 80% of something than 100% of nothing is absolutely true. It's a culture of giving back. It's just being a good person and doing the right thing.
So has it been your experience that one of your clients changes the network to get a lower rate, and then maybe in the future they can go back to the network that they previously had changed from and get a lower rate? Is that almost the way that they need to do it to avoid this balloon analogy of just every year it's more expensive?
Sort of, but not exactly. So if you go from, let's say, full network to narrow network, we had that like elaborate conversation during the presentation. So if you change networks, if you go back up to a larger network, there wouldn't be a lot of reason to do that if you have all your doctors on a narrow network, unless someone does, and then you can add a buy-up policy to the full again. I would say the biggest way you can sort of get away with going from narrow to full, because this does happen and clients do this, is carriers, every few years, a different carrier is going to be more hungry and they'll offer better rates. And you can go from a narrow plan to a full network on a different carrier sometimes. It might be a 1 or 2% increase, or it could be a decrease, but you make that jump. And then once you're that new carrier that's so competitive, you can then narrow it from there and then possibly jump again. It just depends on the market. I mean, COVID was very strange. We saw almost no movement during COVID because everyone was afraid.
Right.
The last 2 years, we've seen a lot of increases. I think all groups have, we see double-digit increases, which is a lot. So trying to move groups to save the money is definitely an option that we always try to offer and make sure that people are looking at the numbers, because you can save a lot of money by moving carriers. But again, moving carriers also causes the concerns of, well, it's a new carrier. How good will they be? I'm currently going through this or that. So it's a convoluted solution. And it's just complicated. So going through that process and finding out if the dollar amount is worth it is one of the things that we like to do.
Yeah, and it takes someone who knows how to pull the levers to continue to use your analogy. And this has got to be a big part of a company's spend, I would think.
I believe on average it's the second highest spend besides payroll.
Yeah, so it's important. An increase can make a big difference, and minimizing the increase, saving them some money is a good thing as well, right?
Absolutely. Kind of circling back, the HR technology platform we have total compensation packets that we can provide to clients. So because it's the second, or it may be on average the second most expensive spend, it's very helpful to show people how much you're paying, because a lot of times an employee might be like, oh, I only pay $50 a month because their employer is paying $700, right?
It's right.
They're saying this is a lot of money. Well, because it's hard to find good people right now. I think a lot of small business, I think I just read something recently, small business owners are still having trouble finding qualified candidates. And having a benefits policy is a huge upgrade as far as
yes, especially if the spouse is covered and
absolutely. And showing an employee or a prospective employee, hey, it costs this much, but we'll pay for all of it, and it's this sort of package. I mean, it really makes you shine compared to your competitors.
I think people see that. In my experience, I've heard that when people are shopping a COBRA policy, realizing how expensive health plans can be, because they've always been insulated to the real cost because the employer pays so much of it. And then when the employer's not there to pick up their part of it, they go, how much is that? Right?
I mean, that's definitely a shock. If you're paying for 100% of it, it could definitely, you can feel the pain.
Yeah. And so I love your idea of sharing with employees how much more the company is putting in for them beyond maybe their paycheck and what they see. So this is great. Okay, let's talk about artificial intelligence. I know how you love that. And we talk about it a lot in the ref community because we see it really evolving quickly. What's your view of artificial intelligence, and are you using it at Buettner?
So I've dabbled in it. We don't really. Carriers use AI, which we obviously work with the carriers. So it's an experience. I mean, some apps will send certain things to members depending on like metrics they have that is driven by AI. But one of the biggest ways that I've seen AI be used, and I'll put two examples. One is in hospitals. So hospitals can use AI to better diagnose, which is fantastic.
Right.
Because I mean, computers are obviously very smart. And if you take a photograph and you have AI I don't know if it's better than doctors or if it's just as good, but I know it's very good. And I know a lot of carriers or hospital systems will use AI to better diagnose or even to check the diagnoses. And then two, from a care standpoint, from when you have a group that's not fully funded or fully insured, that's not a small group. So it's actually rated. So let's say like a large group. In California, over 100 is large group, or I won't get too nitty gritty. Over 100 is large group in California. So some carriers are able to, or some systems are able to pull a census, and it uses an AI system to grab people's information, like their pharmaceuticals, and it would be able to basically give you an underwriting for the group of how much the group may cost. So like an actuarial value of a group. Because if you're taking a certain medication, they may say, hey, this is XYZ disease, this will be expensive. Or, these 4 people are on this, it'll cost this much money. So we've seen carriers leverage AI to better predict, because all insurance is predictions, right? I mean, you pay a certain amount of money and the insurance carrier is supposed to pay a certain amount back, and then that's how it works. And if they don't, it's called the MLR rebate, which is a whole other thing to get into, but they definitely do use it. And I would like to use more AI. I'm just trying to figure out where I can put it. Because for me, like communication is big, and I'd rather write my own emails or call my own clients than use AI for those sort of things. But I'm sure there's ways and systems where we can just make things faster. And I'm definitely putting my thumb on the pulse to try to figure out what those are and make sure they're HIPAA compliant and all that kind of information.
Yeah, you have that.
Yes.
You have that concern.
Yes, we do.
This is big. Okay, so you're at the helm. You've got the wheel. Whatever the analogy is, you're leading the charge. Where are you taking Buettner in the future? What's your vision?
I would say the next 5 years, I'm really aiming for an intelligent and service-based growth. So what I mean by that is I want to grow in a way that's sustainable for the company and where our service level is always where we want it to be, which is obviously very high. At least for us, that's what we always want to pick. And I think just exponential growth, I don't think is really going to be in the picture. I want growth that we find good partners, so good companies that want to work with us. And we always make sure that we do what we do now, where if you call our office, we have someone pick up the phone within a few seconds, and you email us, we respond within the same day. And I never want that to change, because I think our service model is too important to lose with growth, but we can still grow and keep that service model. So that's kind of where the service plus an intelligent growth model is what I'm looking for. We'll need to hire another employee and kind of move forward and see how all that works. But again, if we can make a serviceable approach to growth where we keep our service very high and everyone's happy, I would like to continue that growth year over year.
So I've seen a number of articles, and I've witnessed it firsthand that there are a lot of business owners in different industries that are boomers. Your dad's probably in that category. In your industry, do you think there are companies, brokers like yours that are maybe being operated by boomers? And is there an opportunity maybe for you to acquire them or take them on?
Yeah, there definitely are opportunities. In the last maybe 4 or 5 years, we've seen a lot of, because the broker community is small, and I've been on the board of, it's changed its name, but it used to be called OCAHU, which is like, it's an association of brokers. It's called CAHIP-OC now.
Oh, it's not better.
But it's it's very tight knit, so you know brokers.
Okay.
And over the last few years, a lot of brokers have sold their firms.
Okay.
So, and they've sold it usually to larger parties. When money was affordable during COVID, right? A lot of cheap money. We would obviously be interested in also buying a firm, but it has to stay within the values of sustained intelligent growth. But yes, that's definitely been something we looked at, because there's a lot of boomers, I would say, in our industry, and there's probably a decent amount of Gen X. There's very little millennials.
Yeah.
And you don't really see in college campuses people say, "Hey, I want to work for insurance." Like, to me, it was like I almost died on the street. I go, "This is helpful." Most people, they're probably thinking, my father actually told me another good advice. When you go to a car dealership and you buy a car, you get a car. Like, you drive off on this brand new car, and it smells good, and you got this new screen. Like, you feel good about it. With insurance, you're basically signing a piece of paper, and you don't really see the benefits until you have to use it, and then it changes your life.
Right.
So the whole process is different. So I don't know. You don't see a lot of people like me in the industry, or Gen Zs. So I do think a lot of people will be leaving the industry. And even when I first came in 10 years ago, people were thinking about leaving the industry already because of the ACA.
Right. If anybody's listening out there now, live or in the future as a podcast or off of our YouTube channel, and you're thinking about selling your firm, my direct experience, one man's opinion, find a peer to sell your business to who has a similar size. Selling it to a larger company, if you value your value proposition, can be really challenging when you end up being just a division of some big, large enterprise. It feels to me that many times that what made that small company special gets lost. That sauce gets lost over a few years of ownership by a large strategic acquirer. My 2 cents. So there you go. Call Brett. How does someone get in touch with you if they would like to talk with you for some reason or another?
Why wouldn't they? LinkedIn's a great. Right. I'm on LinkedIn a lot. I post every Tuesday and Thursdays something about HR or newsletters for employees, and so all good HR stuff and benefits, what have you. And then also our website, biabenefits.com. So biabenefits.com.
Oh, that's nice and short. I like that.
There you go. Yeah. Go to the page, and then there you go. You can call me up. My mobile phone there, actually.
I'm sorry?
My mobile phone's on there, so you can call my mobile phone.
Oh, there you go, ladies and gentlemen. Let's start calling them. Make those phones ring, baby. Make it rain. All right. Well, this has been a kick in the pants. I've enjoyed it a lot. I've looked forward to having you on the show. And I said at the top of the show, we're going to have a good one. And Brett, you did not disappoint.
Thank you, Rick. Glad to be on. Appreciate it.
You're welcome. And thanks to all the people that are listening. If you're a peer Orange County entrepreneur like Brett, or you're a nonprofit leader and you would like to be a guest on a future episode, then it's easy. If we're not already connected on LinkedIn, find me. I'm Rick, R-I-C, Franzi, F-R-A-N-Z-I. Let me know in a connection request that you have an interest in being a guest. And between Haley Stern, our producer, myself, we can get you set up for that. It's pretty straightforward, having now done it for 15 years. We think we've got a model that works well for the guests. Would love to have you talk about your organization or your firm. And until the next time we all have a chance to be together, I hope all of your business decisions will move your company in a positive direction.